This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
It is competitive out there in the market right now. I don't know if you've been experiencing it all, Matt, or if you've heard stories, but people are looking to buy their next home, but they keep getting beat off because many people are wanting to sell their current home as well.
Yeah.
And they're like, man, but they're not. But the sellers of those homes are not willing to accept what's called a contingent offer, contingent on that home selling. So people are just getting frustrated, and oftentimes, in order to overcome that frustration and just win the house, they are actually bidding more than they would otherwise to win that next home. And so what we have done is
Is there a better way?
But there is a better way. There is a better way. And so that's why we've partnered with American Pacific Mortgage, specifically the JJ Mack team. And today we have Lindsay with us, who heads up that team.
Good morning.
Hi. And so what we're going to do is we're going to walk you through exactly how you don't have to get beat out on those types of situations. So if you're currently living in a home and you want to buy another home, whether you're wanting to buy a home out of state, even in Texas, we won't discriminate against the people moving to Texas, or if you're wanting to stay local in the Sacramento region, there's a way to do that. And so we call it the Buy Before You Sell program, but there's a ton of different sub-programs within that, right, Lindsay?
Yeah, we have multiple options for drawing the equity out of your current house if you have a property that would otherwise be contingent to use some of the proceeds from your sale to put down towards the new house. We have more than one way that we can draw some of that equity and get you that money up front so that you don't have to write a contingent offer.
So, for example, let's say there's someone living in Sacramento and they got a new job out of state. Maybe they want to move to Tennessee because they got a brand new job and they want to move the family right away because the job starts on Monday, right? And they have found a perfect home. You know, they did some home shopping. Oh my gosh, it's gorgeous. It's perfect. You know, let's go buy it. You know, there's a bunch of offers, but what do? We got to first sell our home here in Sacramento. So they're in this little pickle. What do we do? You know, we don't want to lose this home that we really want that has property and everything, you know, but you provide an option for them. Mm-hmm. There's a way.
Yeah. And what we see a lot of times in situations like that is that people have no intention on holding on to both houses.
Yeah.
But they have a timing issue. They need to bridge this gap between buying the new house and selling the current house, but still being competitive in the market so that they don't have to pay more for the house or get their offer beat out.
Or find a rental, you know? Okay, they sell their home and then, oh, great. Now, what do we do in the meantime before we find the home we want? Well, we're going to have to go spend some money on a rental or stay or move in with someone.
Mm-hmm.
That's why a lot of people are using this Buy Before You Sell program because it saves them money in the long run. They're not having to pay for a short-term rental. They're not having to pay for an Airbnb. They're not having to overbid. So let's say the house is priced at $500,000, right? What we're seeing is that your typical contingent offer is having to come in 3 to 5% higher than everybody else who is not contingent. So to be competitive, you're coming in 3 to 5% higher, $500,000 purchase price. That's an extra $15,000 to $25,000 out of your pocket. That's a lot in rent. Yeah. That's a lot in moving expenses that you don't have to pay if you're able to use the Buy Before You Sell program with the JJ Mack team.
So how does this work? It just seems like it's an impossibility.
So we have two different options, a third as well. And these different programs allow you to either, if you have some of the funds up front yourself, we don't have to factor in the debt of your current property against you when it comes to qualifying. In those situations, if people can come up with a minimum down payment, which is usually pretty low, 5%, then we can just qualify you for the new house mortgage payment. If coming up with the money on your own is not an option, we also have a couple of ways to draw from that equity if you need a larger amount of money to pull from the house.
So essentially, you're just using the current home you're living in as collateral for the next home.
Got it.
And the question that I get asked all the time is, well, how am I going to qualify from next home? Like, how am I going to make 2 mortgage payments? Like, how does that work?
Yeah, so I suppose that is part of it, that depending on the timing of it. But I will say that most people have every intention on selling pretty quickly.
Yeah.
And where people can feel a little relief in that is that after you buy a house, you don't start making a mortgage payment right away. It's usually one 1.5 to 2 months out before you make your first mortgage payment. That usually gives people enough time, we see, to not feel that pressure of making 2 mortgage payments for an extended period of time. But there, that will be part of it, is that depending on how long it takes to sell your current house, you are still liable for your first mortgage until you sell that property. It doesn't take the liability away from you, but it can allow you to qualify for the new property and move in before you have to sell that other house.
And so just to put this in perspective, like 60 days may sound like, oh my gosh, that's so fast. Like Lindsay and the JJ Mack team are closing homes in like 11 days, 14 days. Like you find the home and 2 weeks later it's yours.
That's so crazy fast. Isn't that incredible?
It is. It's super fast. And it's partly because they're not a broker. They're a direct lender. Like they have brokering options. And so that it's just their funding process is way, 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 way quicker than brokers out there. So
I mean, think about that. Your offer is accepted and you're saying as little as 11 days, you could have the keys to your home. You could be moving into your home in 11 days.
Yeah, and
That's crazy.
These are not like atypical loans. These are like FHA. I think we did a 10-day VA one, like quicker than cash, like in many instances. Just because you're cash doesn't mean doesn't mean you're going to be faster, or it's because you got to move. Some people are cash and they have to move money around.
Yeah,
right, and it can take some time to do that. So that's.
And then you said there was a couple of other options though as well, right? Tell us about those.
We have a couple of options for drawing from the equity of your current house, and then we also have the other alternative option that if you're able to come up with a small amount of your own funds, we have a program that will allow you to not have to count the debt of both mortgages against you. We can eliminate the debt as part of your liability for the house that you're going to be departing, so that you can still qualify, but you can come up with a small amount of money. And what a lot of people, we have clients currently that are doing what's called a recast after they sell their house. So they have every intention on selling their current house.
Yeah.
They were able to come up with a minimum 5% down payment to buy this house. And then when they sell their current house, they'll have a couple $100,000 in the next 2 months. And you can do a one-time recast that will still based off the same interest rate, but it reduces your principal balance and proportionately decreases your payment to reflect that lower principal balance.
Let's say you bought the home 5% down, that same $500,000 home, that's $25,000 down, so you owe $475 on the loan. But then you sell your home, that's the new home in Tennessee. But then you sell your home here in Sacramento, you make an extra $100,000 off of it. Well, now you're down to, now you can recast and you can put that $100K down on the home that you're living in. So now your loan balance is
based off of a
$375.
What do you mean by recast?
So it's an alternative to a refinance. So it doesn't change your interest rate. It doesn't change your term, but it reduces your principal balance and also reduces your payment.
Gotcha.
Because you could make additional principal payments every month, and a lot of people do towards their mortgage, but it's never going to change your payment. It's just going to change the length, how much more you owe and how much longer you have to pay for. But when you do the recast, it allows the home to be your loan to be reevaluated at a lower principal balance.
So it's lowering the monthly?
To lower your monthly.
Does it cost anything to do a recast?
It's a very small amount. It's a few $100s.
Okay.
So that it just to cover the processing of reevaluating that on the back end. But it's a very common process. It's easy, and it works great in a market where interest rates haven't come down. Say you purchased and the interest rates are still the same when you're ready to do your recast, because usually it's just a few months later. Then you don't have to go through the process of refinancing, worry about taking a different interest rate, or pay for a refinance, and you can still take advantage of a lower payment. And then when the opportunity down the road, when interest rates comes up, you still have that possibility too.
You can still refinance, but that's another great thing. So what I absolutely adore about American Pacific Mortgage, specifically the JJ Mack team, is all of their different options. So they have like hard money, they have new construction, they have land, they have mobile home, they have bank statement loans. And then if that wasn't enough, they also allow you to be able to refinance within a period of time, like with your streamlined refinance program, right? Mm-hmm. So essentially what that does is you're able to refinance for free if interest rates come down. So a lot of people are saying, hey, I just don't want to be stuck paying this.
That is a really great idea.
It saves you thousands of dollars, like thousands.
So explain that in a little bit more detail, what that offer is.
For our returning clients that we close their loans and then they come back to refinance, and for a lower interest rate, we cover their loan costs.
So basically, if someone is out there right now and they want to purchase a home, but they're nervous about the interest rates, like they feel like, well, if I get into this home, what if interest rates drop? Then I'm in trouble and there's nothing I can do. And my neighbor's going to have a lower interest rate than I am, but you provide an option.
Yeah. I would say that's really appealing to most people because they are taking a higher interest rate at the moment to get the house that they love, but they are very much hoping and anticipating for when the time comes that they can refinance. And so a lot of people are waiting for that. They're like waiting. Well, I'm going to wait until the interest rates bottom out. I'm going to keep waiting, even though I need really to be in a home now.
And what's crazy is too, once interest rates go down, guess what's going to happen to home prices?
Sure.
Mm-hmm.
They're going to go up because it's just a balancing of affordability.
Yeah.
And so
if
you get in with interest rates now, then interest rates start dropping, your appreciation will go up, your equity will go up, and then you can just do the streamlined refi with Lindsay and JJ Mack over at American Pacific Mortgage. Saves you $3,000 to $5,000 depending on.
So it's a free refinance.
Yeah, we cover the loan costs of the refinance for our returning clients, so that. And in a lot of situations, if they need an appraisal, we'll give them a voucher to cover the cost of that too.
Is there a time period of where they need to be in, a window of when they can do that refinance?
It's usually 12 to 18 months after you purchase your house. But that program has kind of continuously been extended as rates have stayed higher for longer, because we want to give that benefit to our clients, especially our returning clients. We want to make sure that when they're ready to refinance and take advantage of the lower rates in the market, that they come back to us and we take care of them again.
Yeah, this isn't like a bait and switch program. Oh yeah, you can refinance in the next 3 hours for free, you know?
No, we want our return clients to come back and be happy. And that's part of, the service that we like to provide to people and, have lifelong clients.
Absolutely. And so we've been talking about, the buy before you sell program and the streamlined refinance. If either of those things interest you, please give us a call. Shoot us a text at 530-GET-MORE. That's 530-GET-MORE, and we will get you in contact with Lindsay so that way they can provide you with these services. The call is quick. The call is free. It does not cost anything. It will not ding your credit. And this way you can at least start the process, do some pre-planning, and don't miss out on this incredible opportunity to buy before prices start going up again.
I think we can all agree that trust is a critically important thing when it comes to your finances, when it comes to those big transactions like selling or purchasing a home. And that's why we can't recommend anyone better than Johnny Jennings and the Tom Daves team with Made for More Realty. How do you know you can trust them? Well, just check out their 5-star Google reviews, more than anyone else in our area. The record shows that they sell homes 27% faster than anyone else in our area, and for 3% on average higher selling prices. So if you're looking for help in selling your home and you want someone that's going to do a professional job, someone you can trust, then reach out to our good friends Johnny Jennings and the Tom Daves team with Made for More Realty, powered by EXP. Just Google them. Made for More Realty today.